Hi, guys. Welcome back. Starting a new hour. I'm John Logan, filling in for Tom O'Brien today. I do a show every morning from 8 to 9 and try to cover quite a bit of ground before the market opens every morning. Try to give you a heads up on some of the usual suspects, get into a couple of stock plays. And I'm doing a webinar November 12th, 6 p.m. Sign up on the homepage of the TFNN website. We're going to go through this scanner that I'm showing right now. We're going to get into the intricate details and kind of show a 1, 2, 3 process or 1, 2, 3 step process that's hopefully going to, allow you to find more opportunities and get through the minefield of some of these instruments that are out there in the S&P and some of the global indices. Show some of the new features too and how those may apply to some of your daily trading paths that you may go on. Here we go. Let's take a look. Let's finish up with the S&Ps. Let's see where they ended up. And then we're going to kind of move into some of the Dow 30 stocks and give a heads up on how to possibly move forward with some of those relative to what's happened today. We're down significantly, about 100 on the Dow. Let me just see, approximately 160, 170 points on the close here. The S&Ps, we've had some pretty long-term breath positive situations. We've obviously been in an uptrend. 2063 was that big number we talked about this morning. That was met, reached a low of 2062. I'm going to call that satisfied and bounced right off of it. So, we talked about 2083 short-term traders. That was a little bit of a support area. The intermediate to long-term traders, we talked about 2063 being support if we pulled back. So that was met, satisfied almost to the tick. And we're up about, 10 points off of there on the close here. So going back to our scanner, we've got to take a look at this, and we've got to look at our breadth statistics. So we're looking at, a mixed bag here. Long-term weekly breadth, which I'm a huge fan of to get the broad, significant turns of the marketplace during the year, net positive, net negative. We've also got our daily, which is negative. So weekly positive, daily negative by a smidget. And we've got a huge middle ground on that. So what does that mean? That means that right now we're probably going to have some, volatility bouncing around. You're going to, be able to look at trading opportunities more so from the support side still in the long term, but you're still going to have some, contra trade, sell resistance situations that might be appropriate at times. I'm personally going to lay off the short side and look for still bounce opportunities on the S&Ps until that long-term breadth turns negative, and on our S&Ps until we start getting some closes below 63 or 45, 2063 or 2045. And that's just the way I'm looking at it at this stage. So what we're going to do, we're going to get right into some of the Dow stocks. I mean, I'm going to get to as many as I can because I know a lot of these are in you guys' portfolio. And I'm going to turn that off. Sorry about that. So a couple of stocks that were ending up positive today. Procter & Gamble, barely. Well, it was positive a while ago. Now it's turned negative. That's one of the all-time kind of anti-stocks, I used to call it when I was trading a lot of listed stocks. But the two stocks that were just definitively up today, Disney and DuPont. So let's take a look at those first. And let's see what the deal is here on Disney. Okay, well, 112.46. We talked about that being support this past week and last week. That's still the case. Will Disney continue to lurch higher? And as we look at Disney, we can look at this 111 area support down below we found, but what happens now on Disney? And let me pull this back up. So, what do you do with Disney? This is not a stock to be shorting, especially as on a day like today, it's actually positive. That's showing its hand early. What do you do with it? I think you've just got to place the stops below 112.5 and let this thing ride up. That's the opinion on Disney. We're going to take a look at DuPont really quick. It's the other stock on the board as far as, my goodness. And we've obviously got some news-related events involving this that I'm not going to get into on the fundamental side. This is not one to short. A lot of time oftentimes people look at stocks, oh, if the stocks are too high, let's short it. The stocks are too low, let's buy it. It's on sale. You got to have some technical confirmations to start playing a game like that. And right now in DuPont, it's Katie bar the door. This thing is just still out of control on the north side and can go higher and can squeeze people. Do you have any entry points on the long side right now on this? No, in my opinion. So it's not a short, and you've got to wait for some new profiles to appear on DuPont to even start looking at this from the long side. Something else I want to pull up that we looked at the other day, American Express, this is another Dow stock, and was down about 1% today. Not that big of a deal. We talked about this one, being a relatively weak stock in a market that continued to go up and being able to find inflection points to short, namely about 80.74, 80.75, and recently, as this thing has been breaking down below profiles, 77.23. Is this a stock you need to think about buying and putting in your portfolio because it's something that's pulled back? You got to look at this from a relative strength trading standpoint. You've got to be willing to say, you know what, this is a stock that can't go up when the market continues to go higher. Interest rate spreads are probably going to increase. It's a financial, which means that it should be happy because as the yield curve could possibly widen with a quarter point raise, wow. But the banks are looking and financial institutions are looking towards, okay, this is just the first step in a quarter point raise situation that may happen all year. American Express is showing its hand as, you know what, we got problems. So in my opinion, if market pulls back as it's doing, this stock pulled back today a whole percent, this is the type of stock you definitely don't want to own right now because it's already, all the things we've said, all things considered, but it's also a stock that you may feel comfortable shorting if the market continues to pull back. This would be the one that would, again, market rallies, not that much pain, probably won't rally past 74, 76, and you got some good downside targets with this. So that's the talk on American Express. Let's take a look at Apple, which is probably in everyone's portfolio if they own a mutual fund. All right. So, something like this in a big range-bound, wide balanced area on the long term. 2 days ago, we had a new profile appear, a new fair auction for this particular stock. You have support on Apple at 117.92. You have breakout opportunities on Apple above 121.85. I hear the music. We're going to have to go to break. We will be right back, folks.